and get this going here, and we'll have that available. So we're going to talk about the aileron and the difference between this indicator and some of the other indicators that we have at TriggerCharts is basically that many of the other indicators essentially are looking for a very concise look at volume, price, time, and making sure that we're finding those areas that there's the opportunity for a breakout or a breakdown. Now, if you looked at some of our other indicators in the Commander series, which includes the basic things like, okay, well, the radar, where is the best opportunity to maybe get long, get short, the altimeter, etc. This is much different. This is really a contra trend indicator. Now, it can be used along with the other indicators, of course, whether it's the altimeter or the autopilot, but essentially what we're looking for here is to find incredible areas of exhaustion of a particular trend. Everybody understand that? And by the way, if you want to right now, you can actually chat and put some information into the area of the chat, or just put a couple of your particular symbols in, and then we'll get them afterwards. So you can preload them as we go, and we'll try to make some time available for that. Okay, now let's get a kind of going on this and give you some important features of this particular indicator. Okay, so here's the deal. By the way, this is Andrew Horowitz. I maybe didn't introduce myself. Sorry about that. One of the major areas that you really want to focus on in an indicator is either something that's going to be working with trend, against trend. It's going to give you a bit of an advanced look at where things may be going. Obviously, if you don't have any kind of an advanced look, it's just coincident. What's the point of an indicator? You can just look at a chart and be done with it, right? Okay, so that being the case, when we look at this particular indicator, the core that makes up the actual indicator is about 11 different unique, some proprietary, some not, indicators that are put together and weighted in a way that we have found it to be very much I guess we'll call it an opposite look at a particular stock or a market, futures. The reason is that we look for where this, again, we'll get into what exhaustion means, but when a trend is kind of petering out, where it looks like it could actually turn, and those are often times that you want to go against the current trend. Now, not always. There's some criteria that we'll get into on when you want to do this and when you don't want to do this, but essentially, those are some of the times that you can actually find some of the best opportunities. And when you use these with other things such as the altimeter to find if there's a drop area or a breakout area, well, these can be very helpful. You can customize this in terms of the speed. So in terms of the speed, we're talking about how you trade. It's not only the time frame that we're looking at, but it's also the things like, okay, we're going to use either standard and simple moving averages when we calculate our setup and trigger lines, or maybe we're going to be looking at something like an exponential moving average, and we can take that and change those, or we can maybe move them from a 5 or a 10-day, and depending on how fast you want to see these crossovers happen, we'll get into that. It could be used on any time frame, whether it's daily or weekly, monthly, or 60 minutes, whatever it is. We're going to go through daily just to give you a taste of what it looks like and how it works. And as I mentioned, you can use stocks, futures, forex, and it complements the other indicators that we have. Okay, moving along. So the indicator, and if anybody knows anything about planes and flying and aeronautics, the aileron in a plane, in an airplane, basically, just to give you the quick down and dirty, is if you move it in one direction, if you move the left side of it, the right side is actually going to move. It's kind of like left brain, right brain in the body. So if you utilize the aileron on the left, you're going to have something happen on the right. You utilize the aileron on the right, something's going to happen on the left side, or the movement to the left. And the point here is that it is, again, an opposite reaction to what we're looking for. There's basically, what we're going to look at is the aileron level, and usually it goes somewhere between a -70 at the outskirts to a +70. We also have the setup lines and trigger lines, important things to consider. Exhaustion clusters. There's color coding that gives you indications, and again, customizable user inputs. So these are some of the basic things that we're talking about, and then we're going to get into each of these and take a look at what they mean. Here's an example of a particular chart. Here's an example of what Caterpillar looks like. I'm going to kind of highlight a couple of things here for you. So obviously on the top of the chart, there's a daily chart of Caterpillar. We're seeing that this is the price action over time. And then on the bottom, you have the aileron. And there's a few components to this. So let me just point those out very quickly. So we have, for example, the bars, the histogram. So we have green and yellow, gets to orange. So there's a gradient that develops dependent on where this is above or below zero. Now the important thing here, this is very important. The important thing is that the aileron for Caterpillar is at the levels that's appropriate for Caterpillar. You can't do a comparison of, let's say, where is this here? Right now it's at, let's call it 60 and change. You can't say, well, compared to another stock, compared to an index, because Caterpillar stands on its own, and this indicator is calculated specifically for Caterpillar. So Caterpillar may or may not have the ranges that another stock may. For example, we see that Caterpillar went down from about, I don't know, 65 or so, negative 66. We see the top here is about positive 70. So there may be another stock out there that doesn't have the same ranges, but in terms of Caterpillar, this is where the range exhaustions come into play. So the colorations like magenta that you see here, and the indicators with the crosses and the clusters. See the clusters right here? These are, again, very much reflective of just Caterpillar by itself. So that's an important thing because it does look to calculate it so that you find a level that is appropriate for just this. So you don't have to do a comparison like we always talk about, like a P/E ratio. What does that mean on its own? It means nothing. You have to do it in relation to something. But the nice thing about the aileron is that we created this so that it calculates on its own, and its overall levels are relative to the performance of the stock itself. So we also have here, I want to show you some other things. You see this red line. That red line we call the setup line. And the dotted or dashed blue is the trigger line. The trigger line is a faster moving average than the setup line. That's how you want to have it. So right now we're looking at a 3 and 5. So we're looking at 3 days on the fast or the trigger, and we're looking at 5 day on the setup, and this is the exponential moving average of the aileron level. Okay, so we see this is kind of cruising along, doing its thing, right? We see that the aileron is picking up and going down, and we see it kind of move from here, it moved up, and we got this big move up, and you see the quickness of the blue line or the trigger line, and the relatively smoother action of the setup line. So what we're looking for here is a few things. We want to see things, for example, we want to see these exhaustion points, the magenta color bars with clusters that could identify some points of changing trend. Secondly, we want to see, for example, a setup line crossing above, a trigger line crossing above a setup line. So like we see here, from down below. Or we want to see, for example, a divergence where we see the stock is kind of moving up a little bit, but if you see the top here, it's kind of just hanging out and doing not much. But we're seeing that you're starting to see a little bit of a slowdown here. You're seeing a divergence in the actual indicator moving lower. You're seeing that the trigger moved below the setup line, and that's very important to say, there's something not going right here. Give you a big warning, and then you get your final ability to say, okay, well, you know what? Looks like there's a short opportunity here because we're seeing this cross and it moved below the zero line. And then this particular stock picked up very quickly, of course. You can see that, and you see that the zero line was kind of punched on the downside, then it came right back, and then again we got back into some exhaustion points here. And what we're seeing now is with Caterpillar, if you looked at the very end here, all the way to the right, interesting, we're seeing a cross down and a divergence of Caterpillar in terms of the indicator. So we're seeing the shorter term trend start to slow down. We're seeing that it's coming lower, faster than the setup, and we're also seeing that when you look at the clusters and the magenta, which is showing us exhaustion, that, hey, there's an opportunity that either maybe I should think about getting out of my longs or possibly I want to think about a short position. All right, so let's get into this a little bit further. So again, here is what we're looking at, the core of this, and this is what you'd look at when you look at the aileron. Let me erase here we go. Okay. So here is a really good picture of what it is entirely. So we have trend exhaustion, or at least the start of trend exhaustion, when we see that we have this magenta bars that come up, and we also see that when they cluster is even a more important exhaustion point. Secondly, we see that we have these setup and trigger lines to the right here, and you see that when they cross over or under, it's an important level to consider. And we have the zero line. That is a demarcation point of the trend directionally. When it's below, usually trend's coming in, and when it gets to an exhaustion point and we see it cross up, maybe the trend is ending, and what we want to do is go long. On the top end, when we see that we're seeing a divergence, and when there is a level of exhaustion and a cross, a significant cross, that's important. So again, we're looking at exhaustion, we're looking at triggers, counter trend, continuation patterns, so that we see that the trend is moving higher and there's really no major exhaustion that's setting up here, but there is points that are concerning. Well, you know what? You could stay with the trade for a while until you get a number of crosses, the exhaustion points, clustering, and then a divergence where you see that the indicator is moving lower, maybe where the stock continues to stay higher or move up a bit. And then what you do from there is you look to exit the position or change up with knowledge that there's something going on with the trend. And by the way, all of this, a lot of this information is in the actual PDF. This is available for TradeStation. I put that into the area before, the little chat area, and I'll give it to you again if you want to get a 10-day free trial of this. It's the full version of this. You can go right over to TradeStation. I put that link in there. Okay, so some of the things that you want to look at. So we have the magenta color. That is the initial stages of trend exhaustion. When it gets to a point that we see that it breaches the level that we've seen for the ratio of this stock and the overall levels for this stock, that has been a level of exhaustion over time, we're going to get a magenta color, and then we're going to get clusters. Plus, what we want to find is the trigger line crossing up or below, over or under the setup line, and divergence. Okay, so these are the few things that we really want to focus in on when we're looking at this particular indicator. Remember, it's a contra trend indicator, very important. Okay, this is giving us the opportunity to buy low when things look like they're going to be going down forever and no recovery in sight and nobody wants to buy it. This gives us a really good indication of when, in fact, the opportunity to buy something, at least one of the indications of when the trend is changing, when to buy something or when to sell something. Now, I'll mention this also. This is coming very soon. This is the actual radar screen for TradeStation. It's not out yet, but you'll see that this gives you a really nice look, color-coded, of where the extremes are for a stock, an alert, which direction is crossing, and the trigger setup line, as well as the aileron level at this point. And you could sort these, which is really nice, because you could then sort them to find out, okay, where are the extremes and which stocks that I'm looking at have extremes, and you can kind of go through the process to easily find those stocks that may have turning points that are coming into play. We'll talk about that right now. We'll go into a discussion of this. Let me bring over actually TradeStation. Wait for that to populate on your screen. And what you're looking at on the left here is the just an easy way for us to look at this in the radar screen. On the right-hand side, we're looking at an actual chart. And I want to show you some points here, and we'll go to some of the charts you have as well. So we're looking at Tiffany as an example here. Now let me show you a few things on this particular chart. Now, you notice this is a daily chart. You can pull up any of the days that you want. You can see that, well, we had in this whole section right here, in the heart of this, from November through the beginning of 2014, we saw that the aileron readings were above the zero line. Yeah, sure, there was a couple of points here that we saw some crossing going on. There was exhaustion levels. that we see here and some clusters forming here. But at the same time, we really saw that the trend itself, the stock was continuing on this trend here. That was an upward trend, okay? And at the same time, yes, there was exhaustion points, but there was really no time that we saw that at all, as a matter of fact, that this particular indicator went below the zero line. So we can start amassing information and say possibly that right here was a point that, well, it was prior to this, if you look back here, there was this level of the aileron that was negative. It couldn't really move it at all. It got into a point of, showing a cross up, and all of a sudden we get a cross above zero. So somewhere right about there, you may want to get long into this. Well, what do you do from there? Well, from there, you see the stock is slowly but surely moving higher, and we didn't see any extreme levels that saw not only a cross down, but also a significant cross below the line, down here. There's nothing here. Nothing at all below the zero line. So you can stay with the trend, okay? Now, what happened? So you stay with the trend for a while, and let me erase this. And then all of a sudden, we want to take a look at, all right, now we have a different set of circumstances. Change in the dynamic. Big change in the dynamic. So if we start out here, somewhere around, let's call it, let's see here, and we call that about the 75, 76 level, okay? And we rode this through about to 90, let's call it right up here is about 90. Now we got to change the dynamic here. Not only do we get some exhaustion that we see that is going on, we see this upward movement in the indicator over time. We see the stock starting to diverge in the opposite direction, and we see not only a sharp move, but a significant move lower here that breaks down below the zero line, which is right about here. So you kind of take your position out there. You can short it maybe, and then you go along with the trend for a while, and then right here you get this exhaustion. Now remember something. This is very important. People buy stocks, they don't often sell. So anytime that we have a stock, or an index for that matter, whatever you want to look at, more often than not, when it's oversold to a great degree, people will be looking to buy. Not often are people looking to swarm out of something when it's high because they keep on thinking it's going to go higher. It's human nature. So the better side is really looking for significant downside opportunities when they start crossing higher. Now look at all the, we didn't see a cluster here, which is interesting because, basically there wasn't any significance that was anything more than just a really low reading. It only got down to a -40, but you can see that Tiffany had been acting very well previously and then broke down when the market broke down in 2014. Now what happened here and what you would have done with this is essentially you would have looked at this and said, okay, well, let's just look at the highlighter here. That right in the bottom here, you saw this cross. And not only see this cross, but you see, again, if we're better to buy on a oversold situation, you would have started to think, hey, maybe I'll get back into this because I see a basing out of the position, and I see this is not going any lower. Just can't, and now we start seeing it moving higher. Okay, different here. It was just choppy. This would have possibly been a point that you wanted to look out for, and then maybe get back in. But here, again, better to buy. You start looking at, hey, maybe I'll start nibbling at this, and you would have had a nice run from about 82 to 87. So again, you can look at some of the other indicators with this. Let's take a look at another stock, for example. Let's take a look at Aileron. Okay, Aileron also had a similar situation here, where you saw that. Look at this. This is just really nothing below zero. A little bit here, a little bit here, a little bit here, but nothing. It's kind of the trend is being held pretty well, and really you really haven't seen any major points that are concerning here, except for the fact you saw a real big dip down here, and then a couple days later this cross up, and now it's moving higher. Again, buying on dips would have been really good here, but you can see here the significance of the move, the sharpness of this move could have been a position out until you got down to the bottom basing here and then bought at the bottom here. So again, different scenarios here. Let me give you a few others. Let's look at one that we actually did in fact like and pick up. This is a very good example, Starbucks. Starbucks is clearly in a downtrend, right? So you see that Starbucks has been in a downtrend for some time. But when we look at the aileron, we can see, okay, where did that really begin? Where do the real problems begin for Starbucks? And it was clearly right here with the cross down and then the readings below zero, which was right about here. So, Starbucks, if you were long or short, okay, fine, it kind of did its thing for a while here, but then the breakdown really came into play right here. So you could have shorted this position, and really there was nothing to show you that you should have been out of the short for some time. You moved lower, and yes, you did see this. You may want to say, hey, let's take a little bit of the profit from 80 down to about 75, 76 or so. And then it, again, did another sharp move, crossed below. And now what I really wanted to focus in on was the clusters forming. Now we have an exhaustion point that we've been seeing. We see that the trend has been clearly lower. We see there's been no relief of this at all. And now we have the clusters forming. The clusters formed here as a warning. Now you may have said at this point, going backwards to when you were possibly the long or the trend was continuing, that maybe right here I would think about maybe taking off some of my position. And maybe again, when you saw it break down, I'll take off some position, but clearly at this point right here, you would have taken your position down. Now, we actually picked up a position right about 71 when this was showing a significant amount of exhaustion with the multiple points of a magenta plus a reading below 65, okay, below 65. It's kind of an important number, or above 65. These are some numbers that we have looked at that make a lot of sense to keep in mind. The below 65, and then you see kind of an exhaustion flush right here. Look at this guy right here, this little bar, exhaustion flush down, and then we see a basing. Now, what you could, without looking at that chart, without looking at it at all, look what happened here. You see, right there, you got to cross up after the exhaustion, and then you get this nice ramp. Pick up the position about 70-ish, okay? And you're seeing that it stayed nicely above, behind my drawings, that is. Let's erase this. You see that the particular level of the setup, the blue, staying nicely above. You're seeing that it's not getting, it's not really moving up as much as I'd like it to. You're seeing the stock stall here. But again, we're talking about a $3. We're talking about 6 or 7% pickup in the last 5 or 6 days. Now let me show you something while we're here, and let me show you some of the settings that you can look at, okay? So let's take a look at when you open up the Aileron, okay? You should be able to see this. Here's your inputs. So the first input that you have is the setup MA. Again, all of this is detailed very well in the user guide that you can pick up over at TriggerCharts.com. You can also look at this on TradeStation. When you go there, there's a PDF that you can download. But basically what you have here is a moving average, the setup line moving average, the trigger line moving average, and whether or not you want this to be a simple moving average or you want this to be a exponential moving average. Now the way that we prefer to set this up is the setup is about a 5 bar. The trigger is about a 3 bar. And you use an exponential so that you get a faster move and you can get this a lot faster. And of course, depending on what your trading is like, if you're a trader that likes to have very long-term trends play out, you move this a little bit longer. Kind of keep the overall levels. So if you want to maybe move this to 6 and 10, kind of keep the same overall proportions of this. I prefer using an exponential moving average. You can change that to an SMA and just type in SMA there and you'll get that, okay? Now, that's all there is to the actual settings. Okay, now, let's take a look at some charts. Some people have asked for example, Ford. Now, I've been looking at Ford also, and I've been interested in this, and Ford is up a bit today. There's some news out that they sold a lot of cars in China and all this great stuff, but, let's kind of zoom out a little bit. I'm going to stay with these dailies for a moment, okay? Now, you got some warning signs here, right? If you could probably, actually, let me make this a little bit bigger for everybody. Yeah, let's go like that. Everybody see that? It's a little bit bigger. Actually, that's really big. There we go. Take the whole screen off. So when we're looking at Ford here, okay, all right. So what do we see? We see that generally speaking, when you look at just looking at the landscape of this, the Aileron is saying that, you know what, Ford usually will come in over this time period. It doesn't really hit any major exhaustion points. We don't see any clusters on the underside. We see them on the upper side, but yet the trend has been up here. So really, where do we want to play this? Probably look for where the opportunity is in this circumstance. When there's exhaustion on the bottom, we get a cluster reading, or we see a breakdown below zero, and there's a cross down. So let's take a couple of looks at it. Right over here, there's something. There's something here. There's some move ups from the lower parts. But again, I want to find real exhaustion points. Now, sometimes you get some readings that are questionable. You hit right over here. You have about a reading of let's see where we're at this level. Right here, we're at 68. Okay, we're at a 68 level, which is one of the highest levels we've seen in some time. And when you see that, and then you see the cross down, you can see that, wait, look what happened. We have, right from that point, a move lower. Now, immediately forward, you saw that you could have been alerted that there was a change in the structure after you shorted it or you moved out of it. Now, all of a sudden, you get a low level, then a cross up. You know what? You may want to lighten up your position. You could have gone back to being long, especially if it went above zero. So you've been short here. You've been kind of moving back into the long position, moving up. Then you get another one of these, warning, 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 Will Robinson, warning that, you know what, we're getting to a point of exhaustion. And you see that from this level, there's nothing, no movement, a little bit of range-bound movement. Nothing that really happened. But then you're starting to see this tick down, right? Look at this. Starting to see that it's getting kind of ugly. Really not a lot of a move from about 17 down to about 1550, but again, another exhaustion point that turned magenta, and then a cross up. Could have picked it up again here. Then you get, again, the same look of this thing. Kind of doesn't go anywhere. Now you're starting to have an idea, right, that, hey, wait a minute, like, it ain't going past this level here, right? 1750 is really where it's stopping until something really major happens. And then you get this beauty right here. Now, this correlates to about this level right here. You're starting to see that all of a sudden the trend on the downside exhausted, and you start looking for where's the opportunity to pick this up. Now, you can start nibbling in when it crosses above. You see that it stayed crossed above, so you could have picked it up here at about 1505, okay? And clearly, when you get to above the zero right here, could have bought it, and then it moved higher. And now you get a minor exhaustion point, not totally exhausted, but a minor point of question. And then you get the rollover, big rollover, and then under zero right here, okay? And to be honest with you, what I see here is a continuation pattern. We have it moving lower, a little bit of a move higher, but look at the aileron on the bottom. The aileron on the bottom is showing us that it's not getting any better. In fact, it crossed a little bit above, but look, it just crossed again below. So Ford, again, I was looking at this, not so thrilled about it. Not so thrilled about it. I know that it's up 0.5% today, but again, it's just nothing that I was really excited about because I don't see anything there. Now, of course, we could add some things. Add, for example, just not to get too complicated, but you could add your altimeter here, and you can see, wow, look at this. Okay. Now, when you use these together, well, we're basing here, and we can't get above this level. If we do get above this level, there's some opportunity. But to what level? Where are we going? From 1550 to 16 and change? Not a big deal. Nothing that I'm getting, really excited about. Not really a risky play necessarily, but okay, whatever. All right. Yeah, there's a question about whether or not we could use this on a weekly chart. We could look at SWI. Happens to be on my list to look at, so we're going to bring that up. As a matter of fact, let's look at it daily, and then let's look at this on a weekly basis as well. SolarWinds is a tech company and pretty volatile, or it had been volatile for some time. Doesn't look that volatile here, but you can see some volatility going on. Going back and looking at this, you can see that, hey, there was some great opportunities to maybe pick it up. Let's see what happened here. Kind of blindly looking at a buy right here, right? So what happened? We went from about 44 to 48. But, one of the things that happened here, it quickly moved above and then below again. Again, moving above and below is a big issue. You have to pay attention to that. Let's change this to weekly real quick. Let's get this a little bit longer here. All right, so these are the weekly numbers going back to 2012. Now you see that on a weekly basis, again, same concept here. Okay, this is a little bit of a longer time period, obviously, and you have to be aware that we're looking at this as a longer trading scenario for when you enter or exit the position. Now you see that going back to the area, somewhere over here, we stayed and maintained this trend above the zero line till what? Right about here, right? Right about, I guess it's right about there. That's a warning. Now, interesting, on a weekly basis, it really kind of moved up, right? You know, this is from, let's see what the level that is, 50 to 55 or so. That's a 10% move, but you had a little bit of divergence here or movement in the same direction, then it popped really hard right here. But look how shallow this is. It's very shallow. And then you immediately got a roll down and a cross below, and it's been staying down there. Trend is down, okay? So we can look at this as a trend indicator that we're saying, you know what, this trend is down. It keeps on getting to a point that not only are people selling it, they're selling it pretty hard, okay? But we got the exhaustion indicator, which we had not seen anywhere before on the downside, right? There was nothing here at all. This is the first time right there that we saw the exhaustion indicator come up. And now you get a nice cross right about here. Okay, so you would have been waiting and maybe looking, and here's your cross. So let's take a look at, let's mark that. Let's mark that right. Let's mark that. Let's see. Okay, right about here, somewhere in this range here. We would have been saying, okay, you know what? There's a nice turn higher. That was about at 37 bucks. Excuse me, $34, and you would have rode that all the way to about 42. Nice little pickup right there, okay? And you got that nice point of exhaustion that really wasn't shown before, and you had the prior trend continuing. Look at the downside here, right? And all of a sudden we got this move higher, and now you're nicely above zero. That's a good sign. That's good. So on a weekly basis, it works as well. Now, you're not always going to see an exhaustion point and say, all right, selling, okay? Because you really want to see something like these levels come up, right? Exhaustion, downtrend, then you're moving lower. That's what you want to see. You want to see the exhaustion and then a drop, and when that or the exhaustion on the bottom and then a move higher. These are one of the best when you have these, especially if you believe that stocks are better to buy than sell when they come into exhaustion areas. So let's kind of go through a couple of others. How are we doing on time? Let's see. Perfect. All right, we have, let's see here. Lots of people with things. Jazz Pharmaceuticals. Let's change this back to daily, and then we'll change to a couple other ones here. Yeah, Jazz Pharmaceuticals. Nothing wrong. I mean, this is up. A couple of times you saw a little bit of exhaustion here, but you saw the exhaustion levels over here. But again, you're still in an uptrend. You really don't see it breaking down at all. While we saw exhaustion as a warning, there was really no drop below the zero line here, right? This is just, constant move higher. Now, on a daily or on a shorter time period, you're going to see things that are a little bit different, of course. You're going to see that it's choppier. As a matter of fact, if you go to, let's say, a 60-minute, depending on what time frames you use, you're going to see, there's different opportunities that arise. You could have gone from 161 down to 140 here. It looks a lot different than the weekly. And you would have seen that somewhere around, over this point here would have been your level to, you got an exhaustion point here. Then you got the roll down, then you got below zero after the cross, and you kind of say, maybe I would have looked at possibly shorting this or getting involved in this on the short side or selling some of my position there. And then you got, again, a cross up. You got to wait a little while here. This wasn't the best indication, in my opinion, at all. Again, I prefer to use the dailies for swing trades for this, but it gives you a good indication of how this looks on the various time frames. Let me erase these. Okay. Another one I want to show you, for example, and we can go through a couple of others. This is back to our discussion of where the change in the dynamic occurs. If you look back on this chart for Polaris Industries and you go back to the left, there's only been a couple of times that this stock really did anything other than just trend higher. We could go back and look at this even further, but look at this. There's no real indication. Possibly the only time was look at this little beauty right here. Nothing was going on with the stock, if you notice, right? It came down to about 84, but look at this. This gave you a really nice low reading of 68, which is below our 65 level. And you got a cross up and then a double confirmation that was above zero. Man, you would have picked it up somewhere over here. Maybe you would have looked at, we got some exhaustion in the middle and moved out, but then you would have kind of moved right back in and you would have just rode this thing for a while. There wasn't much that would have caught you off guard here. Now, one of the things, though, I do want to show you is, so we got, again, a significant, this whole batch of this whole area right here, similar to, what happened here, when you see that you got this multiple clusters across up here, we have the start of what could be a change in trend. So the trend obviously changed from about, what is this, 145, came down to about 120. Pretty good move. And you got that exhaustion level, and then, if you were short, you could say, okay, I covered at that point, and move on. And then you get the cross on the upside. Now, I wouldn't take a full position in this. I'd kind of nip at this because we still don't see this getting really that much better. And in fact, if you look closely, I'm going to zoom in on this because I think this will be interesting to look at. You see that, let's get rid of some of these excess marks. You can see that the trigger line crossed above the setup line right on Q here, right here. That would have been the kind of, okay, start nibbling. But look at this, it's starting to come in a little bit, right? You got some dojis here, and you got some, not a great move. I mean, 120, 127, but look at the trigger line is starting to get much closer. You want to see a nice separation between the two if you can. But this is showing you there's a change in trend, and more often than not, you can use this to at least be alerted on the upside when things are changing. You would have gone to a short position somewhere right around here, right below zero, or you would have sold your position. So you got the warning, you got the divergence, then you got the, if you want to use the below zero as a confirmation, that's good, and then you get the clusters here, and you can kind of close that position out. Let's see, we also had clean energy. Clean energy is a pretty wild name. It does chop around pretty well, and maybe, let me pull this down a little bit because I think what's happening is you're not getting enough of a spread on the top end chart to see what this really looks like, okay? So again, looking back, whatever time frame we're going to look at, but you can see that there's some warning flags right about here. There were some levels of clusters forming here, and, it kind of hasn't really been in an uptrend. So again, when it gets really close, when you see that, okay, we've been in a downtrend for a while, now we get a move up, and all of a sudden you say, oh, nice move up, wow, wait a minute, clusters, maybe I should get a little bit concerned about that, especially this stock. This stock is really very aggressive. It moves all over the place depending on, any piece of news that's out there. You look over here, you would say, well, there's your cross, okay, clearly the crossover right there. This is, I mean, I'm not really thrilled with utilizing it for this chart. I mean, the long-term trend has been generally, down from 14 down to 9. Could you say you're reaching some trend exhaustion here? Yes, but look at this again. You're starting to show that you're rolling down on your trigger. This is not a great setup, I must tell you. I'm not in love with this setup at all for a buy. Nope, 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 nope. Tesla. Now, Tesla's a little bit, I guess, no, Tesla would have the right numbers. You can see that on Tesla again, uptrend forever. Okay, uptrend, uptrend, uptrend. It just kind of moved. I guess let's kind of go back even further. I mean, you could have been in this stock at any given time, but let's look at when things start changing, okay? That's, I think, more important and where you could have been alerted. You see that the trend starts changing in this area just to move down, but it was really shallow. And if you were, thinking about this, you say, oh, well, okay, this thing's been moving up for a while. We got this real shallow dip, but then it crossed back up. You know what? You stay away from it. You get some warning signs here, and then you got stock moving higher. You got the Aileron Indicator starting to weaken. Then you get a pop, and then you get some significance. So you got a divergence. You got indicators of warnings. You got more warnings, and then, hey, whoa, you get all of a sudden this move down. And look at this, interestingly enough, that the Tesla, because it was up forever, and you're seeing the magenta that comes in when? You're seeing it comes in almost just immediately the second this thing goes down. Okay? And then you can say, okay, well, definitely I'm out over here. This is the second time down. We crossed down and then they crossed down again below zero. And then if you want to look at the time that you would have looked to pick this up, you would have said, okay, what do we got here? This is downtrend. This is not good. I'm not interested in this. I'm not interested. Okay, here I'm starting to get interested. Something's going on. I see this basing pattern going on right here. Now all of a sudden I see, look at the change in the pattern all of a sudden. Look at the change. Now you could have been as late to get in somewhere over here, about 120. And then you notice that you really haven't seen a change. The only thing you're seeing now is you're getting more warnings. You're getting a cross on the downside, but you're still above the zero line. Okay? So the Aileron really gives you a very good contra indicator. It gives you a unique look at what's happening. It gives you a very nice heads-up color display of the trend issue. And I got to be honest with you, if you look at the historical patterns and you see what happens, and you look at not just trying to jump into something, if you see that there is an exhaustion, but where are we and where are we coming from? At any given time, you can take a look at the chart and say, oh, look, we got exhaustion, and all of a sudden it's starting to roll higher. Well, that doesn't mean that it's not going to continue in the direction. But what you want to do is you want to start nipping, maybe getting long, and then bam, you know what? We moved above zero, I'm in. Then you have confidence in this for a while, and you say, okay, it's starting to roll down a little bit, but you know what? All of our setup and triggers averages stayed above zero here, so I'm not really that worried. I got a little bit of concern here, but generally speaking, hey, this is a check. This is good news. Tesla is moving higher. Now, don't buy or sell anything from my discussions here. This is just educational. This is just a look at things. We're not, doing anything more than talking about how the Aileron indicator can work and where the benefits are. When we look at something like the ES, okay, now I've got some trend lines on here. Let's delete these. When we look at the ES as an example, this is the continuous futures contract. You can see that similar situations arise here. Very good because what you find here is that you have a constant trading of the of the security throughout the evening and all that. So you get some nice movement, and actually the smoothness of this, you don't have to worry about any kind of major breakdowns or any kind of gaps. So you're seeing some real nice smooth movement, and the indicator can be even that more accurate when we look at that. So the Aileron indicator works on not only stocks, but it also works on ETFs, and it works on futures and Forex. You could definitely see that you reached a point of exhaustion here, right? But we didn't get a major flush down like I would have wanted, and seeing that this was over, let's say, a 65 or so. And then what we saw here was that you started to climb a little bit on the bottom from, we'll look at about over here. Started to climb a little bit off the bottom, climbing, and then we got a nice sharp move higher. We got over zero, 16, but still not in great. It's just not. It's not screaming to me a buy here. What it looks like is a quick, down and dirty, bounce from where we were. No question about that. Very fast, but at the same time, is it going to hold? I'd like to see the trend continue for some time, a little bit better before I really get fully involved in this particular. If I was one instrument that I was looking at, you had some warning signs. That kind of popped up here, and then you based out. But again, this move is overnight, so it's a little bit tough. But then you had a nice move down. You got some magenta color, and then you got the move up, so you kind of got longer, right about here, and then you got some more warning signs right about here. Okay, and then you started getting, you had been kind of getting towards the short side over here, and then again, not too deep. That's the other thing, is how deep is the bottom, or how high is the top? If I see just a massive amount of clusters like I'm seeing here, I'm starting saying, you know what? We're getting overdone here. Okay? When I start seeing it that we got a few clusters here, but or magentas here, we're getting overdone. The whole idea here is, this is what I want you to think. Are we overdone? Are we overdone to the downside, to the upside? Where are we here? Are we overdone for any particular instrument? Yeah, Tim, the question is, if you use weekly, it would generally keep you in the position longer. Of course, because the weekly is, you could use multiple things. You use the weekly and the daily to see where you are. And then again, I think it's really important that what you do here is you use this in, at least we would, use this in coordination with, for example, let's see here. Your radar. You see that we're coming up. We came up pretty good right about here to the peak of where if you look at this, got pretty close to moving higher, but really stopped. You saw that there was no movement. If you would have seen that right here was the turn point, you say, wow, wait a minute, there's not much in the area right here, the radar, so that could be a nice pop over the high side. And you could use these as, looking at, for example, right here. Now look at this right here. This is a great example of using multiple indicators at once, okay? Perfect. So, and there's a couple of examples here. I can go back to over here. I can look over here, but again, just as an example, you saw that things were starting to come down here, right? Came right down into its altimeter level. Came right down to the bottom of its radar. Came right down to the last high volume node of the previous one, of the previous radar. And then we got this turn. So we got this bounce right here. Look at this. Right here that coordinated very nicely with the bottom, almost perfectly with the bottom of the the actual indicator on the altimeter. So then you had this nice bounce, and then you had a follow through, and then you had a nice move higher and all that. Then we get a warning here, okay, right here. But we see that we popped over the top and then consolidated for a little while there, right? But we saw a divergence come in. Now this is concerning. You see this divergence that comes in here, and you see nothing going on here. Usually you would see a drop, and we did see a drop. We saw a drop from about 1813 down to about 1760, I guess it was, about here. And then this quick reversal. Don't forget, futures move very quickly. And again, bouncing off the bottom of the altimeter. So you got two things that are confirming. Really nice to use different indicators to confirm what's happening one versus the other. Really great way to look at things and give you additional. I mean, think about this for a second. If you had, and I'm just going to make this very easy. We'll turn off the radar. If you have a situation where you're seeing right here, you can see where I am there, some basing. I'll put on this little spotlight here. You see some basing action going on. You see that you're getting a little bit exhausted into the downside here, and you see all of a sudden this turn, and you see what's happening here, and you see that you held those lines really nicely, and then you get a move above zero. Man, you can say, well, okay, I like that. That's something I could do. I can get involved there. I like it. And once you do, and you get involved with that, you could then utilize the next levels. Okay, look at how nicely this coordinates. Here's where you get to the point where it starts rolling. At the top, you say, well, you know what? I hit the top of that altimeter, and really that's the resistance point. And you say, you know, okay, at that point I'm going to short. And, you know, you had the confirmation here of the short, and then you start saying, well, you know what? What's coming first? Well, I see that I'm seeing a turn here. Hey, look, I got a new altimeter level that is showing that that's where the base was, and that's where the downside risk was, and all of a sudden seeing this turn up, hey, I'm going to start looking at a contra trend on the upside. Now, somebody asked me about GDX. Okay, GDX is the gold miners. Now, gold miners were really out of favor for a long time, very long time. And what we see here is that there was some exhaustion on the downside finally after all this. I mean, choppy movement here. And what you see is that there was some exhaustion reading starting to kind of bubble up, but we saw the trend is still moving down. We see this is still moving down. So, and then we get this big old pop on the low side, and now all of a sudden it's starting to move higher. Now, where would you pick this up? Well, you start going above zero. You know that it crossed up above zero. You start looking at maybe right about here. Happen to be the low point, but you also have the fact that you have your altimeter. It's basing and can't get below that. Hey, that's cool. I like that. Now you start getting in long right about here at about 21, and you got about a 9% gain. Look at that. Now, where are we now? Reaching exhaustion again. We're starting to see that the trigger is crossing below, but we still have an uptrend intact. We have some air between here and probably this altimeter level. Again, I'm trying to mix up a couple of indicators for us to use at once. And now we're starting to see this roll down a little bit here, and I would be looking for, if this does in fact start rolling down again, all bets are off on this deal, okay? Because, you know, one of the big things about this is the price of gold, etc., and you have to watch where the price of gold is going. And I would say that, you know, if in fact we start seeing this roll down, and if you break down below this, there's some support here at 22s. But you know what? If you rode this up from the bottom over here, hey, interesting time to take a little bit of the profit off. Okay. Watson, no, we do not. We will not be making this indicator available for any other platform. This is exclusive to TradeStation. TradeStation we find to be the best and most reliable, and seriously about this, the most reliable program that is available, and it draws out nicely. It doesn't give us a lot of the problems we've written for other ones before, and I just don't find them to be really as beneficial. So let's do like somebody asked about some Forex pairs. Here's our yen. Sorry about that, Watson, by the way. Hey, by the way, just to let you know, there's a free deal over at TradeStation. If you're using another platform, they got like, I think it's 90 days of free platform, free feeds, and free commission. So it doesn't cost much to go try it. Let's look at this. Same thing. Again, daily, you could swap out any time frame here. But we're looking at daily here. We're seeing that, wow, look at that. Got a nice big old exhaustion point. Now, with Forex, we may not be getting, you know, we're not really getting much on the clusters, but we are seeing that the colors are painting in. So you can look over here. We got this exhaustion point, and then it kind of started moving across. And we started moving on the upside here. Now look at this, and let's focus in on this. We crossed down below again here, which is interesting. So we're starting to roll back down on this, and that will be interesting if the yen actually does that, because the yen actually was everybody's expecting to move a lot higher. You could again just sweep across here and find, okay, well, we have some shallow levels. We got the upside here. We got the clear cross above the zero, stayed above there. Okay, then we got the cross down. So let's take a look exactly where you would have been. So, oh boy, let's erase all these. Okay, so this is where you got the exhaustion points going along, and then we got our level of breakdown. So you're probably going to say right about here is when you would have said, okay, you know what, all bets are off. This thing is not moving up higher, and I'm really concerned about this. What am I going to do? Well, move out of that long position that you had that nice run from about 95 all the way about to 102, 103. And now you say, you know what, until this thing turns the next point. But it gives you it does give you a very similar look at this, but you get a confirmation that the breakdown occurred once you go below zero and you broke down from the trigger line below the setup line. So I think that's a really big issue. So you could get this indicator over at TradeStation, and I think it's $75 a month, which really, if you think about it, a couple of trades you're going to pay for. The other thing I'll mention to you, by the way, is that we actually built, on this chassis, we actually built a strategy. And you can check it out over here. This is a trading strategy for the S&P 500 utilizing ETFs. We went back, and it's a little bit different than it's built on the Aileron, but it's called Aero. 2,400% return since 1995, when the S&P 500 did about approximately 450%, utilizing these points of exhaustion and turning points for the S&P 500 to find where there were those levels of buy and sell and short, etc. And I put a link there for you. You could take a look at that if anybody wants information on this. This is a strategy that we run for clients. And again, it's just done tremendously when we did a back test of this, which, by the way, I think is pretty accurate because we did this on a daily basis only. We did not do this on an intraday basis. And one of the big issues on back testing is, okay, well, where did you buy? Where did you sell? We added a bunch of slippage. We added trading commissions to it, et cetera, to make it very realistic. And when you look at this, you'll see that it's a pretty impressive result. So check that out. And like I mentioned earlier, this is going to be recorded and available on the TriggerCharts website, TriggerCharts.com. Do me a favor, check out all the indicators, and you could see what's going on to use these in conjunction with each other. I think is really a wonderful way to make some money for yourselves. So we're going to end it right there. Thanks for your attending, and we'll make sure that any updates that we have and any information that goes out, you will be the first to know. So again, thanks for joining us today for the TriggerCharts Aileron introduction and study. Hope you enjoyed it.